Good morning. Welcome to Options Center. It is Saturday, 10 a.m., 9/24/22. Welcome, everybody. If you are new here, go down to that bottom right-hand corner and hit that Options Center logo and subscribe to the channel. Don't forget to like the videos. If this information helps you out, it really helps us to get the algorithms going. You know how YouTube works and get this out to other traders. So we're going to go through ES on multiple time frames as usual. And we also, I just want to let you know that I updated the Patreon. It's $10 flat for everybody. There was a little bit of drop off there, and I got a lot of things going on. So I wanted to make it all inclusive for everybody. Any trade alerts, any Elliott wave counts and things like that. So please join the Patreon, $10 a month only. And then we'll go from here. ES on the monthly time frame. Okay, guys. We have, after our 5-way move up this channel, we're headed towards the target, the bottom of the channel. We have our first target, the 50% retracement around the 3,500 area. Also the 618 around the 3,200 area. Okay, so looking at the candles, we had consolidation, broke down, retested it, and rejected again. Remember, we keep talking about the 8 EMA. Even on the monthly, that's our trend indicator. The trend is down. The MACD, bear cross, down. RSI, rejected off of trend line, down. Everything's pointing down. We're right at the support area for the lows that happened in June. I do suspect we'll break those, come down to our target, maybe a little sooner, not sure. It could stop short a little bit. So once we get around this area, or it could poke through. Once we get around this area, we know that we're going to have a little bit of confluence there. So we'll be looking for some sort of bounce. And I don't think it'll be, it should be a significant enough bounce to trade, but I don't think on this time frame it's going to be a very significant bounce before we head a little bit lower to our second target. On the weekly, and I just like to emphasize, this is a bear market, you guys. The surprises are to the downside. Notice this channel that I drew here. This should be a midpoint channel. I'll end up later on putting another line a little bit lower for the bottom of the channel. It should connect to this area here for the wave 4 bottom that I have. But for now, just notice that when we dive in here, the confluence that's going on with this mid channel, 200-week simple moving average, and this wonderful support area, former resistance, where you see price bounced up and down in this this zone. So I have the zone mapped out, and that just happens to coincide with our Fibonacci retracement. So 50% on that monthly time frame, 3,500 area, 3,200 area. So not a prediction, but my map, my guideline said what I think is happening as we come into this area, bounce, breakdown, and ping pong in here for a nice wave 4 before headed lower. So I once we get into this area, we know that things have changed, and we'll probably bounce around here. There will be a midpoint in between this channel, the sideways channel, to where price can bounce as well. But notice that's where we're headed. That's where I think we'll go. Not tomorrow, not next week. I think we've had most of our easy move so far. So going down to the daily time frame. On the daily, we came down to this the support area here around the 3,700. We broke last week. I do think now that that's broken, I don't see a fake break coming. I think we'll stay under there, and our next target will be around this 3,500 area, that confluence that we were talking about. So it's not coincidence. I draw these supports and resistances together. I don't draw them together. Excuse me, I said that wrong. I draw these on separate charts according to the candle formations and things like that. But it's so obvious that you see all this support area here, so that's why I drew the line across, and it just so happened that we gained that support. Okay, so we lost that, and let me expand this again. So we lost this support area here, and now we're coming into this massive area that we saw in the weekly and the monthly. So it's just natural that we'll come down to that point. Now, does it have to actually touch that line? It probably will, but it does not have to. That could come a little short. We just know that when we get down to that area, we should lighten up on our trades. Okay. So on the daily, we have the MACD still continuing to the downside. We have the RSI. Some people saw that as a divergence to the upside, but with our Elliott wave count, we said, hey, we're in a third wave, third of the third headed down. So we're probably going to start breaking and breaking divergences, or burning divergences, as some traders say. And we did that. We came down. We're starting to get a little bit oversold, but I imagine in a move like this, a third wave headed down, that we'll see much deeper oversold conditions, and then possibly even like an oscillation in the oversold area before we even get our massive bounce. But the divergences should build up well enough until we actually start breaking to the upside. And if you hit that notification button, you'll get some of these. They'll let you know that I'm making these videos, and I'll update you on, especially when we think we're getting a large reversal. I'll put that video out with with some emphasis on it to let us know that things are happening. We might be looking for reversal soon. So we're not right now. Next week we should see just a minor reversal that we'll be looking for. So let's go down to the 65, see if we can kind of pinpoint what's happening there. Now on this 65-minute chart, I'm going to squeeze it in a little bit. 65-minute chart. We had this almost wedge forming area here, and it just, once you see that wedge happening, some people probably went long right here at the 3700, 3723 area, right at the bottom, and that's where the bear market will get you. We broke down from a wedge. It's not very common. It's not a common thing, but it is in a downtrend, but we're not used to downtrends in these past 13 to 15 years of bull markets. So we broke down from this area, and now we have a channel. So perhaps we test this channel bottom, but channels can break as well. This is an impulsive move. I do think we started a little bit of a bounce, but I don't think we'll get back above this into this wedge. The 37.23 is now our resistance on the smaller time frames. And I could see maybe a ping pong just for Sunday night into Monday before heading lower into this options expected move, and also a weekly support. So after we break 36.61, I'm looking for the next target to be around the 35.90 area, which is our options expected move. It's also the weekly support, and is right in this this green zone here, brings us right to that 3500 area that I was talking about, and right down to here as well. So this is kind of a big zone here, to where I think this wave, this is all one wave in itself, probably will be over. We get a significant sort of bounce sideways. It should be, we had a nice sharp bounce here. Well, as we get this momentum to the downside, it should be much more of a shallow bounce, but sideways, and it should take some time. It might be a full week that we oscillate in up and down into a zone before starting to head down more. And so we can look for something like a flat pattern or a triangle pattern that are considered time wasters, and before we start heading down to our next to our next levels. And once we break down underneath that 3,500 area, you can bet that we're going to start ping ponging in that 32 to 3,500 area that we're talking about earlier in this video. So that's what we're looking at. If you're interested in the Elliott wave counts, I'll put those out. I put them out on the weekends, sometimes at night. I just put them up when they're necessary, and it gives us a roadmap of what we're looking at and how we're trading. So that's on our Patreon. Anything else? I think that might do it, you guys. We're looking. I did put in alert last week for bonds to start reversing. It's I do have a stop in that area, in the 150 area. But if you're interested in bonds, I I talked about the TLT, and we're going long, and we're gonna start phasing even if we drop lower for the bonds, 150. That's for TLT. But if the bonds even, let's go into a higher time frame. It's such a good trade because I think the bonds over time are something good to have for your portfolio anyway. You saw this channel breakdown, so it's very bearish, but in this monthly time frame underneath the 200, I don't suspect we'll stay under that, or at least break down much lower. But if we do, the yield goes up. So this isn't my IRA. This is a long-term thing where we're going to scale into TLT, and we're going to collect dividends, and then eventually we should collect premium as well. So that's just it's a win-win situation. Price goes down, yield goes up. It's a very long-term play, and I thought that would be very healthy for our portfolio, for my wife and I, and our family. So that's something to look out. I did put a trade alert video out last week on gold, and I do still think gold, silver, and commodities, they're pulling back a little bit more, and I do think those are going to be a good play as well for the long term. Okay, that's all we got here. Thanks for joining us at Option Center. Have a wonderful weekend. We'll talk to you soon.